The best correlate that I've seen for Bitcoin price is global liquidity. Probably global liquidity go higher in 2025. And given all the other characteristics we see about Bitcoin at the time, I'm pretty bullish.
Alden is a strong Bitcoin bull and has become even more bullish on the leading cryptocurrency as a result of what she describes as several bullish factors aligning for a super bullish year for Bitcoin in 2025. Like many other prominent investors and analysts in the space, Alden is looking forward to a very busy year for Bitcoin, the US economy, and the global economy. The primary reason for Alden's bullishness is global liquidity. Like Real Vision founder and CEO Raoul Pal, Alden is looking forward to a massive explosion in global liquidity in 2025, beginning with the US Federal Reserve and other major central banks announcing rate cuts later this year. Alden predicts that this coming massive liquidity pump, coupled with other bullish factors, including the spot Bitcoin ETFs, which have been taking in billions of dollars from traditional investors, will contribute to significantly higher prices for Bitcoin in 2025. In a recent interview with Natalie Brunell, Alden comments on the recent meltdown in the global stock markets, the panicked reaction to it, and why the markets recovered so quickly. According to Alden, the whole Japanese carry trade issue was completely blown out of proportion, which is why the market's reaction was instantaneous and the recovery just as immediate. With that now fully behind us, Alden is predicting nothing but bull for Bitcoin in the coming months, especially after central banks start cutting and the expected liquidity spikes begin.
Two different time frames there. I never really try to predict a quarter or two ahead because there's any number of idiosyncratic events. I do think as we look out to 2025, I'm pretty bullish. I don't really have a strong opinion for the remainder of this year. We were kind of trading in that 60 to 70,000 range for a while. Lately, we've been dipping into the upper 50s, which is not great. But I think that, especially once we turn to a more pro-liquidity environment, if we see the Fed eventually layering in some gradual rate cuts, if we do get kind of that transition from balance sheet shrinking to balance sheet growing, even if it's not at a rapid pace, as those things occur, later this year and then probably for the balance sheet next year, that should probably help global liquidity. And one thing I point out a number of times is that the best correlate that I've seen for Bitcoin price is global liquidity. It's not the only correlate, but it's among things I track that's both logically and then in practice one of the better correlates. And since I expect probably global liquidity to go higher in 2025, and given all the other characteristics we see about Bitcoin at the time, I'm pretty bullish. As far as those really long-term forecasts, one thing to keep in mind is that they were not like inflation adjusted. Michael Saylor, for example, he gave that talk about the I think the 21-year price forecast, which is a nice touch. And like if I recall correctly, his base case was something like Bitcoin becomes 7% of global assets, up from effectively like a 0.1% or whatever it is now. And so while that is obviously a huge run up, that's basically a 70x appreciation in terms of percentage of total assets. It's not as though Bitcoin has taken over the world in that scenario. So basically in 21 years, can it go from 0.1% to 7%? I don't really view that as like an outrageous possibility. And that was his base case. And the way that you kind of can arrive at that is something, now, depending on what source you reference, total global assets are, somewhere close to $1 quadrillion, which is a really funny number, 1,000 trillions. I think it's something like 900 trillion, right? That's kind of the baseline. And over time, when you go through growth and inflation for another 21 years, that number is going to be a lot higher. That's going to be a number of quadrillions, like thousands of trillions. And then as Bitcoin goes from, whatever tiny sub 1% it is now, up to, some, presumably higher number of percentage, that's how you get those multi-million dollar numbers. Even though in inflation adjusted terms, it's obviously a lot of appreciation, but it depends how bullish you are. I'm not particularly surprised with where we are now, though, because going back to my prior point about correlating with global liquidity, liquidity has been flat for like 2 years. So the fact that Bitcoin's chopping around, at least on that historic metric, does make a lot of sense. When we entered this year, I expected to be higher, but not necessarily new highs. So we got those, at least, we nominally touched new highs, even though we're not at them currently. And my bullishness really extends into 2025, and is kind of reliant on that rough timeline of Fed easing and then going back to structural. If I thought that the deficits were going to shrink, or if I thought that the Fed was going to be able to stay tighter for longer, then it might have to push back my bullish Bitcoin forecast. Because we're basically comparing exchange rates between two types of money, so the fundamentals of both monies matter. But based on the timeline I see, I'm fairly constructive for next year.
Lynn Alden's analysis about a coming spike in global liquidity fits perfectly with Raoul Pal's everything code thesis about central banks having to consistently prop up their respective economies. By periodically printing money to avoid the widespread sovereign debt collapse we came very close to during the Great Financial Crisis, Powell believes we can accurately time the bull and bear markets just by following the activities of central banks. In her interview with Natalie, Alden explains that the apex banks have been withdrawing liquidity for the past 2 years, and the markets can't bear the pressure for longer before something really serious happens. For Alden, this means the quantitative tightening measures are almost over, and it's time for some much-needed easing to stop things from getting too heated. However, while Alden predicts that this will be very good for Bitcoin and, by extension, other cryptocurrencies, she says it might not make much difference to other asset classes.
Yeah, so my expectation, unless something dramatic happens, which is, markets are levered and fragile enough that that's always possible, but assuming nothing dramatic happens, I would expect a kind of a mild rate cutting cycle. So fairly modest rate cuts, maybe next meeting, maybe the meeting after that. We'll see what happens with incoming economic data and CPI prints. And other than psychological, I don't think it's that big of a deal if we get those mild cuts. And the reason for that is kind of similar to why rate hikes had kind of weaker effects than many people expected on their way up, which is to say that a lot of people locked in really low fixed rate debt. And so if mortgage rates or short-term lending rates or business rates, whatever the case may be, if that goes down a little bit, it doesn't really change too much. The people still have their locked in debt. They're not going to refinance that for the most part. You're not going to get a big mortgage refinancing boom from anything less than probably like 100 basis points of cutting. And so I just don't think it's that big of an impact. And I think in general, people keep overestimating the importance of the Fed and underestimating the importance of fiscal, basically deficits versus surplus, in this case, very large deficits. I continue to view that as a much bigger factor than around the margins things that the Fed does. Now, of course, if they were to come out tomorrow and cut rates to zero, that'd be a huge impact. But if they just start a gradual rate cutting cycle, I think it's somewhat overblown what the impact would be.
When they cut, I feel like that's when the market tended to crash. So does that typically happen?
But it's not causal. It's not like cutting it makes it crash. It's that usually something bad is happening, generally a softening economy or some sort of liquidity crisis or something. And so they cut rates in response to that, but then also asset prices are not doing very well because they have lower expected earnings because of a potential recession or a softer economy. And so normally rate cuts are not very good for market prices. This one could be different in the sense that they're coming down from higher than normal levels, at least in modern times with the amount of debt we have. And so going from high to kind of normal is different than going from, say, normal to low because of a economic softness. Basically, if the economy just kind of is average here, then their mandate of balancing employment and inflation can point toward mild cuts without necessarily implying there's a recession or a severe recession. It doesn't mean I'm super bullish on the S&P 500 because it's already, the valuations are rather high. So even if earnings don't have a meaningful dip, and even if we don't have any sort of significant recession, I just think that the forward return prospects are somewhat lackluster.
In other news, Raoul Pal recently made a social media post about low-float tokens with only a small percentage of the total token supply in circulation, which currently make up about 21.33% of the top 300 cryptocurrencies by market cap. The cryptocurrency community has recently turned its attention to the growing trend of tokens with high, fully diluted valuations, FDV, and low circulating supply, float. There is rising concern that these tokens often launch with a minimal circulating supply while reserving a significant portion for future release. At the time of listing, these tokens can see rapid price increases due to the limited liquidity available for trading. However, this price surge is often followed by large waves of token unlocks, particularly from early investors who participated in the initial offering. This dynamic creates a potentially unsustainable situation where the majority of the upside may already be captured, leaving retail investors with limited potential gains. Data from Binance researchers supports these concerns, showing that between 2024 and 2030, approximately 155 billion worth of low float and high FDV tokens are set to be unlocked. Without a corresponding rise in buyer demand and capital inflows, this massive release could lead to significant selling pressure in the market, potentially driving prices down and impacting overall market stability. Despite these concerns, Powell believes there might be a big opportunity in some of these tokens. His post reads, "I'm starting to formulate a thesis that low-float tokens may outperform in a bull market. That is, the most hated rally in crypto. My thesis is simple. The markets hate low-float to high FDV tokens, so they all fall on the initial float, usually by 70% plus as the market prices future unlocks, etc. Most unlocks actually do not see large selling events anyway. However, from that point on, supply is a known, so demand is the more important part of the equation. If a token shows real demand growth, even in the early stage, either from network activity or even speculative interest, then demand will grow faster than supply for now and number go up." Powell explains further that with demand rising across the crypto ecosystem as we transition fully into crypto, summer and fall or altcoin season, low float tokens with a tiny supply and increasing demand will be more asymmetric to the upside in the bull market. Powell adds that his analysis is not an assurance of anything, while maintaining that tokens that show network growth and investor interest may very well be the best performers over the next 18 months. To conclude his post, he adds, "Right now, I haven't done the work to figure out which of these tokens are interesting, and more data points on true network growth will be required. In a nutshell, everyone hates low-float tokens, so they are under-owned. But any increase in demand can move them much more than anything else due to the dreaded low float working in your favor. Like and subscribe to bring good luck and blessings for your financial future and get this crypto bull run going."